Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with, not here today, Bob Iacchino, but we'll be here again next week. How's everyone doing? Hope you're still surviving the volatility. More and more looks like a longer-term bear market. I'm getting incredibly bearish. Overall, I'm still expecting a shorter-term bounce, whether it happens tomorrow or sometime next week. Odds still favor a shorter term bounce, a somewhat corrective move back up. I think it'll suck a lot of people in, and then we'll get the crushing blow, one of many. Crushing blow, you know it's a wonderful day when the first comment is from a bot. Hey Jake, how you doing? Hope you are well. Hope it's nice and I think you guys are even cold down there, aren't you? I mean, not as cold as up here. Today it rebounded a bit. You know, it's 19 degrees, felt warm. Tomorrow going to hit 0 again tomorrow night, so it'll be fine though. How are you doing sailing? I'm glad you are surviving. Hey, Christoph, good to have me back. I didn't go anywhere. Did I go somewhere that I don't know of? Maybe I did. Maybe I went somewhere. I'm still working on the lighting, so you're going to have to get a little glare. I'm not going to powder my head, by the way. Not powdering the head. Tesla Force in the Discord. Let's see. Crossing below the freezing for the first time this year this weekend. Well, stay warm, Jake. I know Jake's in the south. That's why I was asking that, as opposed to me who's in Chicago. Of my little bounce plays, almost none has survived. It's been, you know, this is when the markets get interesting, and I think it's going to get interesting a lot this year. So this is where, you know, if you're trying to play bounces, you got to raise your stops aggressively, as I keep saying. I've been saying this. I actually started saying this before this happened because I was using the company that'll not be named as an example because that started rolling over a bit ago. But if you're taking long plays, and there's nothing wrong with taking long plays, even when these rotation zones are against us, just wait for the high probability setups. At your target, at your first targets, lock in, you know, whatever your reward to risk and percentages say, lock in something. I like to, especially when we're having these sell-offs, I'm not just talking today, but when the rotation zones shift to bearish, I like to, and I'm going to keep repeating this for people in case new people tune in and other people, sometimes you need to hear it multiple times. When you get to that first target, take something off, lock in some profits, and at least get your stop to break even. So if it rolls over, you're out of the rest. If it gaps through your stop, fine. You take a little loss and you close out the position. But don't be greedy on move ups. And I think there will be a move up coming shortly. And then I'm going to watch for another major rollover. But the thing was, a lot of people get sucked into the move up. And that's how we get these bounces. And then everybody's like, see, it's over. It's over. It's over. We're back to blue skies and calm sailing. And then, you know, they didn't tune into the weather forecast, which showed that the hurricane was just on the horizon. So that's just my thoughts overall. Let's see. DAX futures and HD are the only ones. Okay, maybe we'll peek at HD. Hey Ken, how you doing today? 65 degrees in Livermore, California, Northern California. Yep, I used to live in on a bunch of acreage just outside San Luis Obispo, which was really nice. Really nice, 85 acres just outside of San Luis Obispo. So I do miss aspects of California, namely one being the weather. Let's see, that's just a little bit about me. We have Apple earnings. Apple. I know they came out and they again crushed it. We'll check it on the charts. I did peek at Robinhood. Robinhood, the walking disaster, just getting obliterated. Visa, which I have to look at the chart, but I know they came in very strong. So we will be checking out that. See, I still remember, now this is a throwback. This is a throwback right here. I remember the .com times right here when Juniper, I mean, everything would pivot on Juniper, or I mean, Juniper's going to be having earnings. That shows you how long ago that was. And now if people are, well, Juniper, what's that? Is that a berry or something? Juniper? It's a tech company. So, but I just remember that's a little throwback to years ago. Again, let's see. Oh, tomorrow morning, going to be checking out Boeing, AT&T. I'll glance in on ADP, NASDAQ, just to see what their numbers are. But I'll be really watching Boeing. So that's going to be interesting to see how they come in. Let's see now. Sorry, it's sort of a calm day. I'm very tired. Let's see. Hello, help, hello? What does help, hello, Shashi mean? Help, help. Super beautiful down there. Yeah, it was in the San Luis Obispo area. It is very beautiful, lived on. Again, huge acreage with a lot of grapevines. They crushed it. I don't know which one. I know Apple crushed it, and I know Visa pretty much crushed it. By the way, let's see what happened with the advanced GDP quarter over quarter. This was for Q4, coming in 6.9, higher than forecast, but you got to take this with a grain of salt because a lot of it was on massive inventory buildup. Okay, so that's why this was not a particularly bullish number for me. Durable goods, core durable goods coming in line. Durable good orders was a miss. Unemployment roughly in line. I mean, less than last time, but roughly in line with expected. Pending home sales was a miss. So new home sales was still strong, but pending, which was yesterday, pending was a miss. Tomorrow, going to be really focused on the core PCE price index month over month, 0.5% expected. We'll have to see. I will be watching the employment cost index because it is related to inflation. Personal income will be interesting to see if that is keeping up from an inflationary standpoint or not. Personal spending, pretty decent forecast is dropped. Last time was 0.6, and this will be personal spending. You know, it's from the prior month. So keep that in mind. And consumer sentiment, definitely going to check in with that. I know, of course, inflation expectations. So tomorrow is going to be a pretty busy day between 8:30 Eastern, 7:30 Central, and 10 a.m. Eastern, so 9 Central. So we'll be checking out that. Here is today's heat map. Let me just double check this. I know Apple should be up after hours unless it got the Microsoft treatment. We had, I guess things are moving slow today, but this is close enough. Netflix up big. Disney followed suit. Microsoft pretty decent. Tesla got shellacked. We'll check in Visa. I know they had great earnings after hours. Some of the banks got a little hit today. So we will glance at that. Let's see. We don't really need to check in on the Fed stuff. Oh, look at this. Apple. Here we go. Here we go. Here we go. No, my residence was not called the Hearst Castle. And he's referring to the Hearst Castle, by the way, that is in the San Luis Obispo area. Did tour it. I actually toured it around the holiday times when they had all the holiday decorations up. Very, very nice. I would never, just a huge monstrosity of a place, but it was really nice with the holiday decorations. Yeah, Apple up 570. Let's see. We closed Apple at 159. Now it's trading 164. I'm actually surprised. That's a pretty weak bounce so far. You know what? I bet you we're going to have to wait on guidance also. But remember, I mean, this now hit the first and second target of this double. Just still, even if it returns to the rotation zone or this prior resistance area, I mean, Apple, you know, it's longer term against this major support, but that's really key. If we bounce and then Apple breaks below 155 on a closing basis, it's not going to be good for the markets because this is one of the big mega caps that's been holding everything up. So keep an eye on that longer term. That's what I'm really watching for, since it's already hit the first and second targets. The third targets would be longer term gravy, but I'm still watching for that bounce and then potential rollover if they guide weak. So there's your Apple. Thought we'd touch base on that first. Let me get to, by the way, before I tick anybody off or say something that gets people aggravated at me, please do consider subscribing, ringing that bell, and hitting the like button. Or if I really tick you off, hit the dislike button. But still stay subscribed, because I might want to aggravate you some more. And especially ring that bell so you do know live. Oh boy. Or me and Bob live. There we go. Switching cameras, getting the S&P up. We'll get back to those Apple comments in a bit. I am not ignoring them, as I do not, unless I sometimes just miss a comment, but that's unintentional. Even if you would like to tell me I'm dead wrong, or that I blew something on the call, like somebody did the other day, fine, I'll put it up there. No problem with that. Trading's not about being 100% right. If I said I was 100% right, you actually shouldn't listen to me then. All right, pretty much a slight down but doji day. Again, could not get the close. If you want to keep watching the key level, I'm still paying attention to the 62.5% level, roughly 4,300. 4,325, interesting enough. You get below that on a closing basis, then I'll be watching for a further push down. Just because that closes below that on that 62.5 level does not mean I'm going to aggressively target new lows just yet. Although we don't have still a lot of decent breadth, though. What I would be targeting is just first of back push down to retest this most recent lows and this rising longer term trend line. We do have a potential double bottom on the S&P. You would need on a daily basis a close above 43.4150. Your targets as of this point, and I'm of course using the conservative targets at this point because we are against the daily rotation zone, and we're getting the first potential cross of the weekly. So I'm going to use conservative targets, and the first target would be about 45.38. Next target would be about 45.82.83, 45.629. It's interesting. Even I've still left this longer term trend line on here. This major one we broke, and then we had the cascading sell-off down. That's still on here because, and I left it on here for a reason even before this potential double, because even if we rally back here, I'm still in overall long-term bearish mode. That would just be a major kiss of that trend line goodbye. And that would be up here, which would suck a ton of people back in. Oh my goodness. And then you'd see probably more blood in the streets. But this double hasn't even confirmed. In order for it to confirm, you'd need a trade above this high level of, did I list it right? Let's see. No, I'm sorry. I said, what level did I say? The correct level to trigger the double is 44.4625. If I misspoke, I'm sorry about that. That's the level you need to close beyond. If it trades above that level, it will confirm. It hasn't been confirmed, so this is just a potentiality. It does not mean we have to rally. I have to keep saying that because too many people hit me up. Do you had a double top or a double bottom? And it didn't go that way. Well, it doesn't have to go that way. It's not even confirmed. Why I put this out is so people can position accordingly if they don't tune in every day. Let's see what else. Shorter term. We had this nice little double. I did post after in Discord. I was very busy today, but you can see this double top. I use the aggressive targets on this because this nice little reversal move gave me a full target of 43.07. You can see this was the close below it. And then you can see no close beyond that level. It's why we do use targets. Since, yes, some can keep going beyond those targets. That's fine because you can always initiate another trade. But this is why we use the targets. Bouncing off that level, we can start to get some divergences down here. Never getting up to my bullish line in the sand today. And I will reiterate with that. just because I have a bullish line in the sand does not mean you can't take a pattern before that. It just means that's a very key area. For tomorrow, I'm just seeing it might be a little more aggressive. Being Friday, there's still, I'm still seeing stuff potentially tilted to the short side, and people might cover into the weekend. I will be watching a little more aggressively about 43.47 tomorrow if it can sustain a move above that on the open tomorrow. So that's what I will be watching for. Let's take a look. We didn't do a much. Oh boy, come on. There we go. Stuff's moving slow. Stuff's moving slow. Sorry about that. 4 hour, these rotation zones are going flat. We're in a bigger consolidation pattern. Okay, I already went through my key line as the 62.5 on a closing basis. If we get above the bullish mode, I'm not really going to be watching the 4 hour rotation zone. I'm more going to be focused then on a run to about 4,400 to 4408, and then above 4408. I'm watching today's high area with the declining daily rotation zone. As you can see coming up, yesterday can't get above the 8 EMA. Today can't get above the 8 EMA. So that's the next line that'll keep falling. And it will, except if we have a strong rally to flatten out, because it is an exponential moving average. Just so you have the short-term targets, these will stay in place even for next week. 44 beginning next week, 44.75, and then major target area before the double is 45.04 to about 45.12. Let's see. And again, I will get back to the Apple comments. Yeah, it was very peaceful. I used to love it. It was beautiful out there. Hey, Dan Jet, would the ES candle be considered a spinning top for you? It's just at this point a long-legged doji with some of these patterns. Again, this is an indecisive candle to me where it is located right now. It's just we're trying to get a balance and equilibrium. It tested the high side, tested the low side, and pretty much closed, in my book, flat. Yes, it closed slightly down, but this is trying to find some kind of balance. This is more of a neutral equilibrium pattern, testing both sides and then ending back up in the middle. Very indecisive. But we are, if I jump back to that 4 hour in, you have to look at this. We're in a consolidation pattern. Burning off some really deep oversold conditions, sort of back to neutral on the 4 hour. So again, this is where I'll use the short-term patterns to help gauge the direction until we trigger something like a potential double, or until we really get a close below this new trend line. And even up into, it is in bearish mode. So even running up to the daily rotations on the other side of it keeps me in bearish mode longer term. Weekly is essentially, we're neutral now. It would have to get above the 45.33 area to even get back to potential bullish if we don't get the cross. Let's see. Yes, still long. Still long the S&P. Tight stops, still long. And remember, I do everything on the closing basis. So this did not shake anything out because essentially we're at the same place we closed yesterday. This is where, again, I would really implore you to, on especially your longer term charts, do stuff on the closing basis and don't overreact to things, because again, here's where we closed yesterday. Here's where we close today. Yes, did you have a lot of volatility? I mean, you can see it right here. If I put up a line chart, here's your, let me hide some indicators. Here's your line chart. There's yesterday. This is a line on close, by the way. That takes away a ton of noise, doesn't it? So what do you see here? You see is downtrend, broke. Let's just look. I mean, it's very handy to look at line charts. And again, that will be stuff I do look at, and I have stuff in the course on that, but you can see here, it's always handy. You could spot really interesting support and resistance because enough people don't pay attention to the close. But you can see breakdown through the close. Now going down. Now what does this, if you just look at the closing level, it looks like momentum's waning. Look, you have key close over here. You have key resistance becoming support. Verified here. You see, look at this area. This is a key closing area. So significance. This has key closing area significance. When I take away the candles, all right, again, this is the S&P. When I take away the candles, because we've stated this whole time, and this is tough, we've taught for years too. And you find me a video where I've stated that the closing price is not the most important, because pretty much I've always said the closing price, no matter what bar, is the most important. And you can see it here. Close, 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 close. Now, what freaks people out is this. What freaks people out is, oh, whoa, 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 whoa. Yes, this is volatility. Yes, you have to be aware of volatility. But look at the difference between that and if you only had this to work with. I bet you people would be way less emotional. Okay, it's sold off, but look, it's starting to stabilize near prior other key support areas. Does that mean it can't go down more? Not saying that at all. Where would be the next closing area we'd watch for? Well, look at this, about 42.91. And then you see here, you can actually see some of the very key areas. And then just look at the closing basis. Where would the next focus be? Just off of closes. Where would be the next major target for closes? Should we break down from, again, this area below 42.95? Where I look at this. Look at right in this area. Yeah, it's not exact, but does that not give you an area? You break below that, you got some key stuff right in here. And then you can fine-tune it using this other information. Without being, oh my goodness, just take a step back always. That's also why we look at multiple time frames. Sorry, I got off on a sidetrack there. Again, you got to take candlestick patterns into context where they are. It's going to be very different. A spinning top you asked about, that's going to be very different by key highs or lows. All right? Verse in the middle of consolidation. Hi, Raj. What'd I say? What'd I say? I said something. Hi, Rich. Close above 45.25 needed to suggest the worst sell-off. The worst of the sell-off is over. 45.25. I actually think would say the worst of the sell-off, even if we get a close and triggered, is double. The worst of the sell-off is over, at least till the next major leg down. I'd actually be even before that level. I'm guessing you're still long the S&P/X. I am still long, as I said before. I'm still long. I obviously said something that, I got a wow from Sterling. So these are little things. It's why it's very helpful to tune into these, because you get little tidbits of stuff that I've learned over the years, and this is where I try to help people, because you can see a lot more noise in there versus here. So key takeaways from today. Take a glance at your line on close chart on different time frames, and use candlesticks. Why? Because the closes and key opens jump out at you. Refine them with line on closes, and always make sure you cycle through your time frames. Don't get stuck on one time frame. There's your lessons for today. Line chart was the wow. It's why there's a lot of little nice tools in here, even things as simple as line on close. Is it valuable? Yeah, it's very valuable. And enough people don't realize it because they don't understand how to use a very simple tool. And there's lots of stuff I won't show, and I'll tell you why also at some point. Like, there's a lot of these charts I will not use. Why? Because they are volatility specific, and you have to put in too many parameters and adjust it for volatility. It's not saying they can't be valuable in certain circumstances, but the two most valuable charts you can use are candlesticks and line charts. Okay? Point figures are very useful. You have to adjust for volatility properly, and they can help you see a bigger picture. We just don't go into it in this course. And there are some systems using other charts, but they're way too specific to cover, and they're too tailored to individual markets or sectors. That's why I don't cover them. There's a little other preview of stuff to come. NASDAQ. Have to make some adjustments here. We do also have a potential double in the NASDAQ. Again, this 62.5 level, which is still in place. Let me just make sure. Yep. Still in place. 62.5, 14,025 roughly. So that's key. Watch for that on a closing basis. You do have a potential double in here. I'm going to shift this, though, right now. There we go, to those proper conservative targets. Still deeply oversold on the daily. Just checking at the weekly, you see the NASDAQ is actually in bearish mode. And what's interesting enough, even if this double triggers on the daily time frame, look where the targets are. They're up where the crossover of the rotation zone is. And we do not trade crossovers for anybody new. It helps keep us on the right side of the market, though, and watch for key areas for reversals, just like in this up move. Rotation zone, rotation zone, rotation zone, rotation zone, rotation zone, rotations. Now, can you do the same thing on the downside? Rotation zone, rotation zone, rotation zone. That's why we utilize it. So, double targets. It would need, first off, a close above 14,639.75. Targets. 15,041. Would not ignore that because you also have a flat 200 there. So that would be a great area to aggressively move up stop should it trigger. Then you have the other side of the daily rotation zone right now at a significant level, 15,145. But then the next target's higher on the double or potential double because it hasn't even been confirmed yet. 15,240 roughly and 15,435. For anybody interested, here are your settings so you can get the exact numbers on your charts. 0.5, 0.751. Nothing's hidden here. Shorter time frame. You can see I'm ignoring the 4-hour rotation zone. We're in this consolidation pattern. Bullish area for tomorrow. This has to prove itself a little more to me, but I'm going to be coming in about 14,358. Get above there, I'll be in intraday bullish mode. So that's where we roughly stand with that. And again, you can use these harmonics to trade through, but that's the key level. By the way, on a rally, if we do get through bullish mode, this has to come up a little. About 14,500 to about 14,525 would be my major resistance. Above there, I'd be targeting this key high. Why would I be targeting a key high? Because it helps validate this potential double because you trade above there. That's where this becomes no more a potential double. It becomes a confirmed double, but not yet necessarily triggered unless it trades or closes above there. So there's your NASDAQ. What do I want to look at now? Sorry, just a little tired today. Moving a little bit slower. Dow does not have a potential double. Dow still holding up. Let's just take a look at our percentages. So, again, these were reset because it went after the time. But the Russell so far is the weakest. The Dow, no potential double. Bullish line in the sand, for tomorrow, I'm coming. We're actually above. I'm going to come. Let's do it right around here. This is roughly about 34,225 area. Again, the 4-hour in consolidation, actually making higher lows on the Dow. If you have to choose, if you're going to play an intraday play and you're playing relative strength, if the Dow starts out stronger, you know, you can always play the diamonds or the micro or mini Dow futures to the upside. My order of stuff would be Dow, S&P, then NASDAQ, just because the NASDAQ is lagging. So tomorrow, roughly, if we have bullish mode, I'm just targeting this high area from yesterday and today, around this 34,660 to 34,690. Above there, 34,908 and then 35,116. Support on a closing basis, I'm still watching 33,657 area. If we start breaking below that intraday, then I'm just going to use these harmonics for lower, and I'd watch for a retest of this low area. But you can see here lots of buying pressure in the Dow. Whenever it's dipping below this 33,725 significant level, see dip below, move up, dip below, move up. Didn't get quite there, move up, dip below, move up. And it's getting resistance at the rotation zone, which, by the way, again, is the 8 EMA, the bottom of it. Oops, I forgot. That was the Dow. There we go. Let's see what comments we have. We'll take a look at Apple in a second. How's that double bottom on NAS? Still looks like a triple to me. It didn't have enough rotation back up. It's still a double. 1, 2. On the daily time frame, and that's the one I'm referring to, Christoph. Do you think that Apple will save the market? I think that Apple could be a catalyst for a nice bounce. Remember, things are catalysts. Okay, I'm still long the S&P for a reason. Okay, but and again, people will then say, yeah, it was due to Apple, but Apple's just the catalyst. Visa, yeah, we'll take a look at those charts too. Not even going to comment on that one. Let me just jump into Russell. The Russell's just looking horrible, but again, you do have, this would also be a potential double. Actually, below the next harmonics, I got to ratchet these harmonics down, but we do have a potential double also on the Russell. This side would be the conservative targets. You'd need a close above 2409.90. I just target 2050. Close above 2050, 2112. 2144, 2174 are the targets the upside. So that's everything there. Let's just glance at bonds, and we'll look at earnings. Bonds potential double on at least on the 10-year note. I should say notes potential double right here. So I will be keeping an eye on that too. There it is with the targets of 129.15. 129.26, 130.06. And that would essentially, even if we went to all three targets, just take us back into the weekly rotation zone. Now, gold just getting destroyed again. This is why gold, you still got to, as long as it's in this range, you have to, when it gets to key levels, take something off and prepare for a pullback and then reload. Both gold and silver. I'll probably go on another rant with that sometime, not today, about why, cash settlement versus metal settlement and delivery, because it wouldn't be behaving this way if it was actually metal settlement, but that's something for a different day. Until then, Apple, I wouldn't say it's really ripping. Let's just oops, I didn't mean to do that. Let's take a look at the after hours chart. I mean, it's moved up, but that's that's not a rip to me. That's just a move up. Pretty solid move up. Again, key areas on Apple with they really beat. Let me get the numbers up on the screen. Thank you for typing those in. Let's see. Here we go. Wavy, thank you as always. iPhone revenue 71.63 billion, up 9.2%. They beat that. Yeah, Mac revenue is up 25%. iPad revenue down 14%. So did I see that out? Everything right? Let's see. What did Tim say? Tim Cook on supply constraints. We saw supply constraints across most of our products. We're forecasting that we will be less constrained in March than we were in December quarter. Interesting. And this is still a pretty muted bounce for me after hours in thin markets. It's not even above the daily rotation zone. So I am keeping a close eye on that. And that's going to be one of the first things I tune into on the open tomorrow, by the way. Visa. Here's your Visa. Now, this is more of a slight, not really. Well, based off the close, it closed at 206, is up 216. That's a nice really bounce. I'll be watching to see what happens with Visa tomorrow, if it sustains the bounce or if it pulls back. Remember, this is sort of also really tied to consumer spending. Does anybody have the charge-off numbers for? Here's the Visa numbers. Again, Wavy, I really appreciate you typing these in or cutting and pasting them in, or however you're getting them in here. Thank you for that. 7.1 versus 677. $1.81 versus $1.69 is expected. So yeah, anything on the Visa charge-offs or that's what I'm really interested in, and or loss provisions. Oh, let's do Robinhood. Robinhood and his merry men aren't so merry. Yeah, this is down to 1035. We did have a potential double. See, again, this is why you don't just trade potentials. This was a potential double. We're down here now. It's no longer a potential double. Oh, we'll get a bounce in Robinhood at some point, but it's just, again, it was one of the things that got way over-ramped, way overvalued. They're losing their customer base more and more, especially without the meme pumps and dumps going on as much. And you have more and more people who last year, everyone was a brilliant day trader of meme stocks, and this year, not so much. So they're shifted on to other things. And if I hear one more person ask me why I don't cover NFTs, I don't know what I'll do, but I will freak out. That's Robinhood. So they missed. Let's see. Russell is the most interesting chart in the market. Yeah, well, you also have small caps tend to lead on the upside and to the downside. I did notes. Here's your yields. We got a question on some yields. Oh, by the way, Bob was talking with his spreadsheet with the yield curve. I punched in. Here's another great thing to use for the line chart. I put in all the yield curve. So here's like the 30-10s. All right, we'll go through this next week with Bob again, but you can see the 30-10s. Here's the zero line. You can see like the 35s, the 30-year versus 2-year, and you watch for it to dip below zero. That would be if it inverted. So we can go through that. Also next year, I spent today doing a little bit of that. So that will be interesting. Where's the 10-year? The 10-year yield, again, up a little today. But I'm watching for a potential bonding play, at least short term, in the notes, which would then bring yields back down. Let me know if this is helpful information or if it's too much information or you guys don't really care about it. Just trying to cover a lot of different things to really help people out, especially at this time. Let's see. Yeah, I went through the potential dailies. If M&A activity keeps being blocked and small caps don't get help, market is in trouble. I think the market is in trouble overall. But again, I think we'll get a bounce first. Mike, I'm using the fibs on the Qs and SPYs and not seeing the right leg coming down far enough to make doubles like the NAS and S&P. Should I assume those are potential doubles on the Qs and SPYs? Yes. Because the reason I do the futures is because the patterns play out slightly better because of it takes into account the 24-hour markets essentially, and Europe has a big thing to play in the way the futures trade. So I would rather come up with the patterns on the futures, even more so than even the cash, because they don't trade. You know, you don't have everything trade close to 24 hours. I want that in certain markets, like the financial stuff that literally trades around the world. I want to use things that trade 24 hours so I can capture the full movement. And I don't like the pre and post market. If you're gonna do it, Ben, I don't know if you want to call me Benjamin or Ben. Just let me know that. I'm just going off your handle. But if you want to do stuff with like the Qs and everything, and this is the one time I will make the exception to where I tell you I don't use extended hours stuff for normal stocks, but you can use some extended hour stuff for the Qs and the spiders just to help you see where things traded, because it will make it, you will get that little extra trading in there. It's not as much as the futures, but you can help gauge to see if even with the pre and post market trading there helped you confirm a target. Now, what you can do though is map out the things on the futures. So we know this level on the futures, and we know the high is that we're looking at on the NASDAQ futures is from the 26th, correct? So if you wanted to trade that on the Qs, I know it's going to be this high. Okay? And you can roughly guesstimate where your levels are, or you can just keep watching the futures, and then when the futures hit the levels, make adjustments to your Qs. Which is what, if I'm trading the spiders or the Qs, then that's the way I do it. I keep an eye on the futures, but then I can make adjustments to my other positions. I hope that made sense to everyone. That's a good question, though, Benjamin. Yeah, there's your Apple results. They beat on revenue, beat on earnings per share. So record high for installed base of active devices. Yeah, I did see that. Let's see. We'll see. Again, I don't know if Apple's sell off. Again, the overall pattern on this market's still bearish. What I've talked about before is if stuff follows through on earnings. Like Intel, remember they beat? Look at this today. You think this is bullish after they beat? I mean, Microsoft, which is a mega cap, but even with their beat, look, how much can you tell? If I covered this up, you'd be hard pressed, and I quizzed you. How would they do on earnings? I mean, they did really well, but this chart's not indicative of it yet because stuff's still getting sold even with good earnings. TNX, head and shoulders. No, this is too. I just traded this as a double top though. This shoulder's too close to the head. But you can still, this exceeds this by enough, and this with this hiccup, and you're right at this level, you can trade this if you want. Just trade it TNX with the double pattern right there. There you go. Even with this hiccup, you know why I like this? This hiccup doesn't bother me as much because it's still reversing this move. And if it triggers, it actually triggers below this base. So you'll get people who bought the support also turning into sellers. So that's the way I do TNX. All state indecision on the weekly. Yeah, that's indecision on the daily. Uh, I would ignore the rotation zone. It's just gone flat for now. All state is. Gee, I'd just be really using on a closing basis the retracement harmonics. So I'd be watching 122. Get a close below 122. I could easily see a run up to the 200 again. You get a close below about 120, right at the 50, also there, then I'd be watching for the bigger pullback in prices. So that's how I do the analysis on Allstate right now. I'd really like to see a resumption of trend move. It did get to the first target for this clear path move, which was this breakdown area. It doesn't have much left to the upside unless you can get then a close above about 128.60. Let's see. From my comment earlier, Qs and SPYs, I guess close representation in S and SPY, but not mirror movements. Well, you don't have mirror because, I mean, they're close enough, but just gauge off the futures, and you can trade them. If you only have a stock account, you don't trade futures. And by the way, mini and micro futures, especially micros for people who don't have a huge account size, get approved for micros. You can trade the micro futures, and they're fantastic. Bought as a potential interesting entry point on double. Would you mind taking a peek? Sure, I'll take a. I like to look at stuff. Yeah, that's nice. Again, everything I'm pretty much using across the board is with conservative targets right now since we're in bearish, but this didn't even hit the first target yet. Pulling back this, because this was a trigger which wouldn't have given you a reward to risk. Let me just see. That's the weekly. There's your daily. I like that really on a weekly. So a safe play at this point would be a little rotation back up. That'd be an interesting play. You're into an advanced clear path move. You don't have a lot of stopping points. You have this little stopping point behind the clear path, but that's essentially the second target. And you have the 200 week near the final target. If you're not in it already, this could be worth a nice little can't give investment or trading advice, but this could be, from an educational point of view, could be very interesting to investigate further. Let me put it that way. And it's actually interesting. If this actually got a rotation up on a daily basis within the next couple days, it would be really a fun play. Let's see. Market's in a tough spot. Even the good earnings report ends up selling off. Yeah. That's the one I forgot. Texas Instruments. I mean, they did really well on earnings. And look at this. Daily rotation zone and then smashed. So that's the kind of market we're in, even if you beat, because the market's forward looking. And I still think with inflation, you can only pass so much along to the consumer. It's going to start crunching earnings coming up this year more and more. And if anything hints towards weaker guidance, it will get us longer term crushed, or at least not bought up aggressively. Let's just see. I'm just looking at some stuff. More financials. See, and here's my other concern. Yeah, it's somewhat in tech, but even these price to earnings can come down a lot farther. Okay, that's my bigger concern with some of this, because the earnings multiples will get compressed. So that's why even when we see bounces, I'm still longer term. I will expect more legs down unless something fundamentally changes on the inflation outlook. Macro is too strong, and the macro will trump the micro. Yeah, we'll go through the yield curves more with Bob next week. Okay, I guys got those charts set up for everybody. Thank you, Sailing. I'm just giving my thoughts, especially in this more and more in this turbulent times. Call me Ben. All right. Thanks, Benjamin. Just kidding. Thanks, Ben. All right. Yeah, the yield curve's the flattest since January 2019, and we'll get some minor steepening, but I'm expecting them to continue to go flatter in the longer term throughout this year. Thank you, Andre. Sorry, I'm still catching up on comments. Thank you. Uh, hey, you get a super sticker. I'll take a super sticker with a pair character exaggeratedly stretching his arm forward to offer a cup of coffee. You essentially bought me a pair cup of coffee. I will take that, Andre. Thank you so much. When you trade, how many screens do you have in front of you? If you're cool to share, do you have what you're showing on each screen? I have 5 screens right now. I've had upwards of 8 or 9. I've consolidated down to 5. Again, I have multiple charts up, trading platforms, option windows, news feeds. And I have multiple trading platforms, so, and then I keep, again, if I need to read articles, I have the browser windows, so I try to, if you forced me to, I could trade just off of 2 monitors. One is tough. One is really tough. But 2 I can do if they're bigger. Natural gas is ripping, yeah. Natural gas has because of Russia and what's going on, and then you have the sorry, I can't spell again. I don't want MOX. I don't want MOX. I want the Henry hubs. Give me the Henry hubs. There we go. Natural gas is going to be really, really volatile. Again, with this little move up, especially if the Russia-Ukraine situation deteriorates more, I'd be watching upwards of this into the 5s again once you got the close. I got to bump up this significant level just a bit. Now that's got more significance with this key little gap open. Remember, the order of stuff is closes first, then opens, especially gap opens, then highs and lows. You can see how it's significant right here. So you get back above. So any long right now, I'd trigger that any long play would be to target 479 area. Then you get a close above there. I'm all the way, I'd be targeting about 566 area. Huge amount of puts on options market. Yeah, it's also why things are getting slightly imbalanced towards the overall bearish side, and we have not been able to break to new lows. Whereas that line on close chart really helps you filter out the noise, but separate from that, just new lows. We haven't in the last couple of days, so we've had some decent sell-offs. So again, I'm still watching to the upside. But then I'm going to have to wrap this up real quick. Let's just take a look at Lucid. Yeah, Lucid now to below the 200. May get a slight little bounce here, but, Lucid 2750, I'm going to see how it behaves there. If we break below 2750, I'm all the way back down to probably about $18 long term. ARC, I know... If I updated the key levels today. By the way, we do have a potential double bottom in ARC. Here's your bigger picture on ARC, though. Look, you could have this double trigger and just return you to the weekly rotation zone, and that would be another reload on shorts. And this is getting way overdone. And longer term, incredibly bearish on ARC. But I'm watching definitely for a bounce at this point. If we do not get the bounce, and I would not front run this at all. But the next major cluster below, you see we've pretty much held the 75% harmonic. The next major cluster below is 60.11 to 60.20, and then we have 55.25. SB, sure, real quick, SBNY. Signature Bank. This is not a pattern I'd be bullish on. We could get a bounce on it, but I'd be selling bounces up into the daily rotation zone, and I'm really watching if he closes below this little key area right here, Raj. You see this? See this really key area on your daily? You get a close below that. I'm thinking it makes a run easily for the 200. And look, you're back below the weekly rotation zone. This is an ugly top on Signature Bank. And that 200's coming in 277 and the 50 week about 266. So I'd be watching 266 to 277. You also have this huge weekly prior resistance becoming support. So if it breaks through those, then my major area I'd watch for a longer term bottoming area would be around 257. SIVB. SVB Financial. Again, the financials are getting hit. Some of these are getting hit pretty hard right now. Ooh, sitting there against major support. Watch out though if this 529 area breaks. You're then into a clear path, and my next target would be about 479. Okay, that's on a longer term basis. But that you have this little mini double, and these are what I'm seeing a lot. I'm seeing these little mini doubles. If we get a bunch of them triggered, that's where I'm going to be watching for more of a broad market bounce. But you can see where these doubles, a lot of them trigger. Even let's just go off this side right now. Look at that. Let's say this triggers. Where's it going to? Back to the other side of the daily rotation zone. This prior, see the support levels? Other side of the daily rotation zone and the double target. So this is where I've seen these patterns a lot where we get a bunch of these trigger, we can get a nice little bounce in the markets. We even have that potential double on the NAS and the S&P. We could get the nice little bounce and then a return to rollover mode. And just for an example, on SVB Financial, you have bearish mode on the weekly. So this is the first time it's been in bearish mode since about June of 20. Okay, so now it's potentially, even on these bounces, it takes us back to the weekly rotation zone, and I start watching for another rotation back down. Well, I'm going to put up this comment. There we go. We can end it on this. You are a genius. That was directed, of course, to me. Of course. I hope it would. No, I'm just kidding. I wish to become a rationally minded trader like you. Yeah, now Apple's dumping. Oh, you guys are gonna. I can't get this. Somebody let the company, the Discord, know the company will be. This is not dumping, Rich. It's down $2 from the post market of 166. It's not dumping. You guys, that's barely. What's 1% of 164? 160, so it's not even a 1% move after hours. That with earnings. Michael, your levels and rotation zones are a thing of beauty. Really appreciate all you do. That's why I use them. You don't need super complex tools. I like to keep it. I like to just use what works. You know, and different things work for different people. But if you take one thing away that I teach, just one thing, whatever that is, it's great. Thank you for the analysis. See you on the EV stream. Yes. Oh, boy. You guys don't let me finish. Shop. Again, potential double. Haven't looked at Shop in a while. I'm not terribly bullish. You might get a short-term bounce in Shop, just like everything else. So many things are setting up for potential bounces. These are bounces only. For the time being, I have the right to change my mind. If we do go down, not going to use the most recent swing. That's not going to give me major something else. But next major area is about 657 to 659. You do have this little double. I'm just going off the aggressive. Please fine tune it to the conservative if it's today's low, which means shift it to this. If we don't make a lower low, you'd be shifting it up. But right there where it sits, it's even. You'd be bouncing significant level. I'd be watching 1053 on a bounce. And the first target's just on even on a 25% retracement to this. So again, into the daily rotation zone, but look at your weekly chart. This is ugly. Even going back to the full double target doesn't even take you back to the weekly rotation zone and barely gets you into this prior support becoming resistance area because you have this sort of cluster area right here. Again, it's sell rallies. If you want to take advantage of some of these short-term bottoming plays, fine. It's overdone, yes. But it's not something to mortgage the house, back up the truck, and do a long-term way. We're going to the moon. These are bounce plays. Thank you, Raj. Again, thank you, Sailing Dream. Thank you, Wavy. Thank you, Michael. Thank you, Rich. Thank you, Ben. Thank you, Andre. Again, Andre with the super chat sticker. Thank you so much. And anybody I missed, thanks for tuning in, and I'll talk to everyone later. Bye.